Welcome back to another episode of Property Auction Hunters, and we are joined by special guest Kazy. So we're talking about auctions, so pre-auction, post-auction, at auction. Kazy, you do stuff in the auction space, whether you're buying, obviously pre, post, etc. Have you been doing anything recently in the auction space, and if so, how was it doing?
So yes, I buy a lot of housing association stock, which unfortunately means that it's normally sort of big bold letters. This seller will not accept pre-auction bids, which is generally the case. That being said, I have bought both pre and post auction. I think obviously guys will know in a lot more detail, but the great thing about buying pre particularly or post is that you have a little bit more wiggle room when it comes to your actual auction contract in terms of maybe being able to negotiate slightly more favorable terms. I think it's fun though. Like I feel like a lot of auction buyers, we also enjoy the thrill of the auction. And almost pre is not really as fun. You're just trying to negotiate a deal. It's like going to an agent. Post is like getting to Sainsbury's when they've just bought out the yellow sticker bit. Do you know what I mean? You're going to see, listen, is there a deal to be had here? You're wading through, you got to get on the phone quickly. So I've bought some good stuff. Sometimes just for whatever reason, it could be the time of day, the lot was too late. It wasn't necessarily, maybe it was something that was, an outer London auction house that was advertising something in London or vice versa. And there can be some opportunities there, and you can, whether it be maybe extending your completion terms slightly. So maybe you can buy it with a more sort of favorable lender who's not normally auction specific. So that's slightly better rates, but I think there's definitely great opportunities there.
How aggressive are your offers here? Like if you're putting in a pre-auction offer, you're the type of person that's like to the auctioneer, just to make you aware, I'm not going to bid at auction. This is only a pre-auction offer. It's valid for X amount of time. Or are you kind of more like, here's a pre-auction offer, but I'll still go to auction? Like how aggressive are you when you're putting your offers in?
I think because of, I don't necessarily have the kudos to be saying, look, with the auctioneers, and also because I only operate in London, they're generally properties that have pretty good demands. They're not like your sort of really niche property that they've maybe had 3 inquiries about and people turn up for the viewings. So it's really positioned. Like if I thought I was in a great position to offer a really competitive price, and I would, a lot of the time I have to really think, okay, what's going to get this deal done? And it's not necessarily a case of can I get it on the cheap? It's do I want to risk it going to the room, and what kind of makes sense?
And have you ever paid something pre-auction you think I could have got it less at auction as well if you went to auction?
Yeah, no, I have. But I think when I've done that, it's always been on a basis of I know where the money is. So for example, there was one that I'd just done a property next door, and the leasehold flat on the first floor came up. And I said, look, I could let this go to auction, but somebody could potentially see, I was going, I think, and I'd already gone to market with my flats. They could see the values in it, and it probably would have gone for a bit less, but I knew the potential of what, the money that could be made. So I think for me, it's like the concept of like, a bird in the hand is better than 2 in the sky.
Yeah.
So I'd rather just kind of have a guaranteed return and get the deal done than the risk. And I guess it's always about your attitude towards risk and, risk, how risk adverse you are.
And I think before auction, like it's always a matter of both the seller and the buyer trying to kind of feel what the vibe is and how much interest there is in the property, and also probably people making pre-auction offers need to slightly overpay comparing to what they could get it in the auction. But you never know what you could get something in the auction, but you need to let the seller be thinking, oh, maybe it's going to sell for less in the auction. And you need to be at the same time in the position where you're like, okay, this might sell for less in the auction as well. So I'm taking a risk, seller's taking a risk, and there's a kind of equilibrium found. But you can only do pre-auction deals with private sellers. That's the key thing.
Yeah, I mean, we've done pre-auction deals and then sold them again in another auction afterwards. And I think it's because that sometimes with pre-auction deals, there's so many people interested in a certain lot, and I actually like picking, especially when we're doing pre-auction, picking the lots that are quite popular, because if you can do that and you can get the right money, then when you put it back into auction, you're almost giving people that, because people think I really wanted that, I can't get it now, and then all of a sudden they see it pop up again in auction and they want it even more. So it's almost taking that one thing away from them and then offering it back to them again. So sometimes they'll pay more.
You buy something with the yellow sticker, take the yellow sticker
Take
off.
the yellow sticker off.
Or you put the second yellow sticker.
No, I dust it down, put it on the shelf, make it look all pretty, and just charge full price for it. That's about right. That's a really good analogy, Kazy.
I have to say, I really like the power shift for post-auction offers. Pre-auction and auction, you are in the auspices of what the vendor what the vendor wants, how the vendor has structured things, the agents, the auctioneers, what the auctioneer has promised them. Most auctioneers, they don't want things to sell pre-auction. Pre-COVID, they wanted a busy room, and still, if you got the auctioneers doing the live stream over the eBay clicky window thing, right? If it's live stream, those auctioneers don't want big gaps in their day. They still want to be offering for sale. So the advice of most auctioneers is don't take a pre-auction offer. Trust the process. Perfect, no problem at all. But post-auction, and I've been seeing this more and more, and it's more of a strategy I think a lot of traders are looking at now. They're seeing things go unsold multiple times with the same auctioneer, whether it's I am sold, whether it's Barnard Marcus, others are available. You don't have to pick those two. But where it's multiple resales and sometimes the price is coming down, they're not getting the attention. I quite like that. And I think you're seeing more and more post-auction when these deals have been around the block 2 or 3 times, I think, and your negotiation power is strong there. Because you can see in a short period of time a track record of it's not worth this, it's not worth this, it's not worth this. Okay, it must be worth what I'm willing to pay for it. And then if you can, post-auction, as we like to do ourselves, ask for a 60-day completion, a 90-day completion instead of a 28-day completion. Then you're giving yourself a real good chance to flip it from auction to auction using arbitrage. Save's a big fan. And you can do that on a back-to-back basis. And that's a really effective way to trade properties, to flip to trade.
That's such a good little nugget for everyone to basically, if you were looking to do a back-to-back from one auction to the other, is negotiate post-auction a 60 to 90-day completion. Not every vendor is going to say yes to that. Not every auctioneer is going to recommend to their clients to say yes to that either, although the auctioneer is taking and get paid on exchange anyway. But I also think the interesting thing is, you mentioned, because we do a lot of deals where people have gone through 2 or 3 different auction cycles, right? And they'll come to us, and it's brilliant because it's almost like when you're opening that pickle jar, someone's loosened that pickle jar for you, and all you have to do is just pop it open. And the good thing about that is it's not the fact that the property's not worth that money, it's the fact that it's not being marketed cheaply enough to attract people to even be involved in that deal. So we can pick something up, say something's gone into auction at 120 grand, failed to complete, gone in at 110, failed to complete, 100 grand, failed to sell, and we pick it up, say at 90, we can probably sell that same property for 110, but just because we can attract the guide price and attract a lot of buyers at a really reduced guide price, because that's what marketing is, right? You want to try and bring people in. You can have the best content in the world, but if you don't have a good hook for that content, no one's going to watch it. Same thing with auctions. If you don't have a good hook for your marketing for a guide price, people are not going to be interested in looking at it. So that's kind of where the arbitrage opportunity is I can afford to do that and take a risk. Other sellers can't because they don't want to take that risk.
I mean, just in case we talk very fast, and it's been a bunch of us changing around, some of the important things here is, Kazy mentioned it earlier on, if it's an out of London auctioneer selling a property in London, the right eyeballs aren't going to be on it. So that's poorly marketed. Someone's made the wrong decision, the wrong auctioneer choice. That's one point. Pricing. The fact that they haven't gone in and said, right, how do I motivate the market around this asset? That, like you said, doesn't mean it's not worth it. It just means that it's not been priced correctly. And the other thing is, if it's not been described correctly, or the legal pack is missing important things that give people confidence, you're kind of looking for these perfect storms for pre-auction and post-auction deals. Now, of the 4,000 properties that are being sold a month at auction, maybe only 200 or 300 fall into this perfect storm category of poor advice, poor marketing, poor positioning, and you're looking for that to go, right, how can I, as a trader or someone who's flipping or wanting to get into trading or flipping, one of the biggest issues that investors have, landlords have, is they're asset rich, they're technically cash poor most of the time. And trading and flipping is a really good capital event, just tops up the account. Here's 20, 30 grand for your hassle. That'll either help you with your next reval or your next purchase or whatever it may be. So look at trading, look at flipping, as you know, back in the day, property investors used to hedge their investment portfolio by holding freehold ground rents. I actually think in the current market, the equivalent of that is flipping and trading. Those capital amounts, you don't have to wait 150 years for it to pay off, but you get those little capital amounts. Magical.
Here's a life case study, right, of a property literally that we were trying to buy at auction. It's a bungalow near me. Went to auction with a guide price of 120,000, didn't sell. Ran another auction cycle at 110, didn't sell. Ran another auction cycle at 100, didn't sell. Came to me, said, where would your offer be? We offered 90,000. They used that as their anchor to say, right, we've got 90 grand. Dropped the guide price to, I think it was about 80 something, to get the 90 grand reserve. So that was their kind of minimum. Ran it through the room and used me as a bit of their hook. Sold for 127,000.
Yeah.
That's the reality.
I mean, we operate a very unique space because not only do we trade ourselves, not only do we help people buy at auction, but Hammered, our main business, it helps people sell at auction. And you can go blue in the face, bang your head against a brick wall, pull your hair out, bite your nails down to the bone. The amount of times we tell people, look, we're not telling you this is what your property is worth. We're telling you, if you put it in at this price, you're going to get so much more on the back end through trusting the auction process. But if, you know, we had an example fairly recently, a big commercial building, partly converted, tenants on the commercial side about to go in, and we said, you need to go in at this price. And I think they wanted like 100 grand more. So by going up that 100 grand, it is, you now have every chance on a 50-50 basis that it either won't sell or it will sell bang on that price. If you trust us at that 100 grand less, there is a chance it could sell for 150, 175, 200,000 pounds more because you're motivating the market. Auctions are a market of distress. Yeah, it requires committed people to access that distress. And the best way to take distress and make it look appealing is to motivate people around it. And you do that best by price.
So you must be buying a lot of properties. Like if you buy from the housing association, they probably put things in quite low prices. Do you end up buying a lot more above the guide price?
So it's what I talk to a lot of like the people that are within my group, and like especially more for, you know, people that are starting their journey. They often ask about like, what does the guide price mean? And just like Safe mentioned, I always tell people the guide price is just marketing.
Yeah.
The guide price is, if you ever grew up on eBay, you could have a Ferrari starting at 99p, or you could have a Ferrari starting at 500,000. They could both sell for exactly the same price, because really and truly the market determines where things are. What did you ask about housing associations?
Yeah, so like usually how much above the guide price do you end up buying?
Yeah, so it really varies. Like sometimes it's literally bang on, sometimes it's slightly below. Majority of the time it's significantly higher. But the guide price for me is irrelevant.
Nothing, yeah.
Like it doesn't have any relevancy. It's just, I always say, like, you reverse engineer the deal. So you start with, what is it going to be worth off the back end? How much is it going to cost to get me there, whether that be for your cost of finance, build cost, and your purchase cost? What, you know, is a fair remuneration for me? Like, what profits do I want? And then that's how much I'm willing to pay. The guide price is neither here nor there. So if it's significantly above the guide, I might think, I'm more likely to get this. Yeah. But again, it's really just a case of, if it's significantly below the guide, I'll say there's no point even like deep diving into the property, because the reserves, you know, not going to be there for it to make sense. There has been some recent experience of housing associations where they did put in really low guides, and I think there was quite a lot of uproar from, you know, people buying, because, you know, naturally not everybody is as versed in property, and there are expenses that you incur whether or not you're successful or not. So I think, you know, for some people, the guides being really too low, you know, they saw as, look, as housing associations, you should be a little bit more transparent. And they actually, what they ended up doing is, so the first ones I think sold for like double the guide. The rest of the lots, they actually pulled them from the lots, because I think they got that many complaints, because people had gone in and obviously paid for pre-auction reviews. They'd maybe paid for surveys. They paid for builders to attend with them. So I think they tend to be a little bit more realistic now with their guides.
The thing is, housing associations are probably some of the best traders in the country, because they're not dependent on that money. They're not trying to make money. They're just trying to get rid of an asset, and the auctioneers are guiding them and saying, just guide it really low and trust the process. And they don't have to, you know, try and make sure it sells for a certain price. And that's why actually they become really, really good traders.
Yeah, no, I mean, the housing associations, you've got different types of stock that's in auctions, whether it be, you touched on distressed sellers, whether it's traders, and then obviously the institutional sellers, be it housing associations or government, have to sell transparently for the highest price. And the best way to do that is an open market at auction. But I think, like they work as really good traders in that they're just disposing of assets. It's not their money. They're just looking at, look, this is what we believe is a fair price for the property. And if we can achieve that, we're willing to sell.
Because if they genuinely sell 10% above their guides and it sells for that, they have to sell at that.
Yeah.
So they're actually approving those reserves. So I know it looks like it's low guides, but then they're doing that on purpose because they can sell it at that price or 10% above that price.
Yeah, and I think a lot of their guides are, to be fair now, I'd say more recently, have become more sort of realistic, where you're still seeing sometimes 20-30%, but you're not seeing the 100% above guide, which again, for your more rookie investor, can be quite confusing.
Yeah, it's bait marketing, really.
Yeah.
There are some auctioneers that are absolute geniuses with bait marketing. When I was working for an auction company, we had one trader who insisted that his guides ended with either a 6 or a 9, like a 136 or 179. It would never be a 5 and a 0.
Yeah.
Now,
sounds like some property training companies, but yeah.
Now, put that into context. The whole of the catalogue is round figures, 5s and 0s. That's how it is. It was like, I want my property to stick out for that reason. So it would be whether it was a 2-bedroom flat in Hull for 39,000, it would go in at 39,000. But to his credit, his reserve was the guide price. So he was a trader. Obviously, there was some things in the legal pack no one really liked seeing. You could argue day and night what you want and what you don't want. But I think he started doing that quite a lot, and now you're seeing that habit spreading out through the market. And you see that mainly with traders. Every trader, even if they don't know that other trader personally, they know traded stock. One trader can look at a catalogue and go, that's a trade. They could be 80 to 90% certain of that, right? And then they go, okay, well, let me have a look at the legal pack. And they start taking all these little tips and tricks, and all of a sudden you could be an ordinary person, an ordinary investor, and a solicitor is putting the legal pack together to sell your property. And all of a sudden you've got these trader special conditions in there.
Yeah, that is one thing that I think is, so you look at obviously the special conditions, but now sometimes, and talking about like down value in property, sometimes when you've got all these special conditions in a property they're not actually relevant to.
Yeah.
I'll look at that as just, a retail buyer and say, I'm just going to leave that one alone. Because if I'm getting funding on it and I know they're not going to like it, I'm thinking, okay, there may be issues. So I think in terms of fit for purpose in marketing correctly, like if you are somebody who's putting your property to auction and you're not a trader, you've got to be really careful with who you go to and what you actually put in your special conditions, because sometimes you can talk yourself out of a sale.
Yeah, I mean, one of them we looked at recently, and one part of the special conditions had a whole section goes if leasehold, and then it had like 6 conditions. If tenanted, then it had another. It was a vacant freehold property. Like 3 pages of the special conditions were completely pointless.
Just in case, copy pasted.
Just in case, copy paste.
What's the best deal you've ever done in auction? Out of interest.
That's a good question.
Numbers wise, whether you refinanced it, sold it, developed it.
I'm trying to think.
Yeah, what's the best deal you've ever done in auction while we're waiting for Kazy?
Do you want to hear that? Okay.
I know this one.
So we bought in October 2019. We bought those workshops behind kind of high street shops. They look pretty rotty, and they were so badly marketed. The photos were taken off the doors of the building instead of showing the whole building. Anyway, they were rented for 15,000 per annum. We bought them for £212,000, 7% yield, nothing too exciting. But we thought maybe we could squeeze 2, maybe 3 flats in them. When we gave it to a planning consultant, he got us PD within 2 months for 4 Muse houses. And we sold the same thing with 15k of income when PD for 650 6 months later.
Boom. That's what I call auction arbitrage with value add.
And that was auction to auction as well. That was
auction arbitrage with the value add. That was brilliant.
Jay, how many of those units have you seen?
Now, Piotr, to be fair, if we were to talk about all the deals that we've done, I've
You've seen zero.
no, I've been
One
to
or
Bristol
two.
a couple of times.
Yeah,
I
you
did
were.
Bristol.
You did.
How
That
about
was
you,
a- that was
Kazy?
a turn.
What's the best deal you've done? Or the
think-
worst deal, by the way. This is an open
yeah,
conversation.
no, I'm trying to
Because
think.
we always try and end it with
Yeah.
what's the thing that Safe's going through. Safe's the cash buyer.
Yeah.
So you can guarantee he can be doing the best deal or he could be stuck with the worst thing you've ever heard. It's 50-50.
So I think I always say like my risk appetite is quite low. Like I like stuff that I just know what I'm gonna do. So
Like, you have conviction.
yeah,
on.
I have convictions. I know. So I probably think I bought a flat for I think it was 205,000. I think it was from Harmon Healy as well. Actually, bought it for 205. Spent about 60,000 on it doing like a loft conversion. This was maybe 2014, so quite a while ago. That's what I'm just prefacing prices as well when I say the loft and other
Well,
stuff.
good time to be buying at
because
that
before
point.
somebody else says you can't do a
Yeah.
renovation for that amount, and I think sold it for 460. I think just
That's a good
open
deal.
market in about 7-8 months.
It's a really good
Nice.
deal.
So yeah, it was.
Yeah, I mean, I don't think I've done the best deals where I've bought from auction. I did one where we bought a fire damaged ex brothel 3-story freehold building that had been converted into 3 flats.
Sounds perfect.
Paid 59 for it, spent 32 on it. To be fair, the fire damage was just in the basement also before, and also this was 2019, I think it was. And then we sold it on for 200 grand on an income basis. I think it was bringing in something like 17 or 18 grand a year. So that was kind of like the best one that we bought. The worst one I bought was also from auction. I got a call saying, do you want to buy a grade 2 listed Dovecot building in the middle of Lincolnshire? And I said, how much? They said 35 grand. I thought, why not? Sounds cheap. Didn't even look at the research. Just said, yeah, that's fine. Bought it, got stuck with it for probably about 9 months. We paid 35 plus fees, and we got CGIs and planning and stuff. We were in at like 42. Sold it on again at 27.5. So I think we got out at like 30 all in. So yeah, that's probably one of my worst deals I did through auction.
I think one of the worst ones out. It's not me personally that I've seen or seen a friend who is they were buying through auction. They were buying this house in Greenwich, Plumstead in Greenwich. 3-bedroom sort of end of terrace house. That's it. Viewed it, gone to see everything. Looked okay enough. Had a few structural issues, but wasn't that bad. Ended up buying. Didn't read that there was an addendum. Listing was changed to land at X Road because basically the property later realised it's got an enforcement notice and had to be knocked down. Then there was basically saying nothing can be built on that land again. So effectively they didn't complete but lost their whatever it was, their deposit of sort of 28,000-30,000 because obviously they were effectively buying a worthless, a plot of land that.
Our worst deal, or my worst deal actually was in 2015 when we bought. Actually, it was 2014 in September. We exchanged on a property in the auction, and we completed on this property in May 2015.
Oh wow!
It took us 9 months to actually complete on it because it was being sold with in the special conditions. It said it was going to be vacant. That's the purpose for us buying it, refurbish it, sell it on, and it turned out that there was a tenant, and the tenant wasn't moving. And not only there was a tenant, it was a 2-bedroom duplex flat in Camberwell, and there was like 8 people living in it. Cables sticking out of the walls and stuff. It was actually pretty dangerous to even do a viewing. But we managed to complete with a bit of a fight with the seller. We paid him 5k more at the end to get this vacant possession, but we actually made 48k on that deal.
Not a bad worst deal to do.
Yeah, but it cost us a lot, like 9 months of stress, because we were thinking we just need to drop the deposit. Maybe we have to like.
That's the thing. Sometimes with the post stuff where you're dealing with, do I just walk away? I think we had sort of one similar where it was effectively a short lease flat. Okay, we're gonna serve. We'll come to the Section 42 notice during the conveyance in between exchange and completion. Realized that actually they'd served the Section 42 notice already, so they weren't in their rights to serve another one. So the Section 42 notice they sold was invalid. And they said they had no knowledge, but then through the process, through just email chains, it came back that, well, actually, here's a letter to your solicitor confirming. So it was kind of just going back and forth of them trying to say, well, you've not met the timeframes you had to complete. And us saying, well, no, you breached the contract. And it's sort of at what point do you kind of just say, look, can we just both walk away? You walk away and I'll go, or do you want to fight them for your costs?
And what did you do?
So in that one, we actually won in the end. Got paid out from both effectively between them and the auction house for misrepresentation. And like because also the auction house are the ones that sold it before, so they were aware as well. And
so you had something to anchor it in with.
Exactly, yes. Yeah, so
and do you recommend to people that want to flip to go to auction? Like, is that something that you would recommend, or are you kind of like, if you're going to be doing that, maybe try and go more off market, go through agents?
I don't think I would probably say, like, when people say, oh, where'd you get your properties from? It's very much broad spectrum, whether it be from deal sources, agents, auctions,
traders,
or your traders, open market, etc. I think obviously auctions come with the caveat of buyer beware, that obviously you're responsible. But I think as a property investor, you don't need to be able to do everything. Like, you need to have an overview, but like, I think a lot of people get too caught up in thinking, I'm scared of auctions because I don't understand them. But you also don't understand how to build a rear extension, but you're not going to try and build it yourself. You're going to get your builders in, and you don't have to read every auction pack. You just have to be able to cross off the bad ones and then take that to your solicitor for a pre-auction review. So I'd say, yes, don't just jump into auctions with, zero fear. Make sure you understand what you're getting yourself into, but build a team around you that can obviously be your safeguard to all of the potential missteps that you could make at auction.
Good advice, solid advice as well. I mean, we just on a last note as well, I have all sorts of stories in auction, but I remember one really, really clearly where we were buying a piece of land, got the completion statement on the day of completion with all these extra fees in it, went back to them and said, where have all these fees come from? They said, yeah, sorry, we forgot to add it into the special conditions. I said, well, good thing that you forgot to add into the special conditions, take it off your completion statement. And they basically stood firm. Got into the next day. And then our solicitor was like, right, we're serving you notice then. So we served notice on the actual seller, and the notice period started. And they kind of, I think it really caught them off surprise that we served them notice. And then they started kind of faffing about, and they were playing hardball. And it got to the day of the notice, and we were like, well, look, notice is expiring basically tomorrow. So up to you guys. If you want, we're going to get out the contract, rescind the contract, because we can do. And they ended up saying, yeah, that's fine, just complete. They took the fees off. So you do, if people are wrong, you can really like push back, and you can try and come in from a position of power, like you did from the point of view of, well, this is misrepresentation, technically speaking. So I think there's a balancing act. But I think we've had one recently where someone tried to buy something in auction, didn't realize it was non-standard construction, and basically said, I don't want to put the deposit down because I'm buying it with a mortgage. Well, that's your problem. Don't go to an auction if you're buying with a mortgage in the first place. And I think people find excuses. So there is a balancing act somewhere, right? But I think if you genuinely feel like you're in the right and someone is in the wrong, push them for it. So
I think, look, it's like a lot of people, not a lot of people, there's like, a lot of people don't like property developers. A lot of people don't like traders for different reasons, like, and have different conversations around the space. And you can not like the fact that, I don't know, it costs £40 to park in central London. But if you choose to drive there and you know what the costs are, you can't really complain. If you do a deal with a trader and there's extra fees or there's other things, like, they're in the contract. So it is your responsibility to know what you're signing. And I think that's all I would say. Like, you have to always look at things like if I said, raise your hands if you want to pay stamp duty, no one's going to raise their hand. But like, it's a cost of doing business. If you have to pay the seller's fees, it's a cost of doing business. And does your back end, like your GDV, does it justify paying all these relevant fees?
Well, if it's in the contract, that's their fault for not reading it. My point is, if it's not in the contract, or something's not there, then that's where the misrepresentation is. But I totally agree. I think that's the whole point of auction, is it is the most transparent thing. If you've read the whole legal pack, viewed the property, did your own inspections, that's transparency for you.
It's only really transparent if you open your eyes to read it, right? The scary statistics from EIG, I don't know if they published them yet or not, but the majority of people that win the properties haven't actually read the legal pack yet. Now, there's a chance that they could have just hit download all and then forward it to their solicitor, or got their solicitor to register and all these other things, but chances are no, right? And it's only transparent. Everyone said, oh, they hid this, they hid that. Well, if it was written there in black and white on this document and then reiterated here, it's there, it's transparent. We try and keep a principled approach to what we do. So we've had a couple of issues recently with a client and with one of the properties that we were trading ourselves. and the buyer's like, I'm not performing because of X, Y, and Z. Well, okay, well, all of that is fabricated. Everything you've just said is a big excuse to not do what you said you were going to do. You're in a committed environment. The hammer has fallen, the gavel, whatever you want to call it. The deal is done. The signing the paperwork and sending the deposit, doing that doesn't mean you've exchanged. You exchanged here. This is now just part of the process you promised to do. So we remain principled. There are a couple of things that we have to follow through with for clients, a couple of things we have to follow with for ourselves. If we were genuinely incorrect about something and wrong about something, we'd go, okay, yeah, that's, we're not going to hold somebody against, a brick wall with a knife to their throat. It's a case of, we're here to do business. There's a cost to doing business. There's a cost to us buying stuff. There's a cost to us selling stuff. And it either works or it doesn't.
Yeah.
But this is it. It's like you say, the transparency point. It's absolutely transparent. And the part that people forget is, although that legal pack is provided up front, there's access provided up front, you have every opportunity to ask questions from the point that property becomes live to the point of exchange.
Yeah.
If you fail to do that, that is your failing. There's a document that you want to see that isn't in the legal packet, it is your responsibility to ask for it. If there is something that is unclear and you need clarity around that, it is your responsibility to ask that question. This is your money, et al., private investors' money, et al., a bank's money. These are all risks that come with investment in any sphere, any stratosphere. It is your responsibility.
More importantly, I'd love to hear other people's auction horror stories, if you want to call
Throw them
that.
in the comments section.
Or if you've had any success stories as well, because that's the beauty of auction. You get good and bad. So yeah, throw them in the comments section. Look forward to hearing on that as well.
Maybe with the new election, there will be a new government who will fix those things. Legal packs.
I think the last thing they're going to be thinking about is auctions. But yeah.
Whatever you do, Piotr, do not hold your breath on that one.
Brilliant.